Rick Rule. Is that your real name or is it like a wrestler name and you used to be like a WWF guy and are you related to Ric Flair? Because you kind of look like him.
My real name is Arthur Richards Rule the Fourth.
You're talking to the Rolex wearing, diamond ring wearing, kiss stealing, woo, wheeling dealing, limousine riding, jet flying, son of a gun.
I absolutely positively believe that I will be able to exchange fractionalized, standardized depository receipts of gold in place of US dollars to buy Kinder Morgan like I did in 2009.
And believe it, put it in the bank, whether you like it or not.
Hey guys, Rafi here from the Endgame Investor with Phil of the Bitter Draft and of course Rick Rule on the line, who I have followed for many a year and I greatly respect his monetary thinking. Phil, how are you doing today? And Rick, how are you doing today?
I'm doing well. It was a great chance to be a part of this.
Similarly, I'm doing very well, and I'm delighted to be part of the conversation. Thank you.
I wanted to just start this like right out there, not to waste your time or anything. But Rick, I just put out a video on my YouTube channel on oil, and what I'm thinking, I think you're known as the commodity king or one of the commodity kings. I'm not sure. That's what somebody said to me. If you were to tell me that Hormuz would be blocked for, what is it, March, April, May, June, July, 6 months or almost 6 months now, 20% of oil going through that strait, and oil would be only like $80 a barrel, I would say that you're nuts. But that's apparently what happened. So my thesis on that video, and I want to hear what you think of this, is that it's the SPR and the 400 million barrels internationally that have been released in response to this war or in preparation for it that have kept oil prices suppressed. But if those reserves run out and the war is continuing, then oil could go to 150, 200. The dollar amount, I don't know where it's going to go, but the yen in that situation would be in serious trouble, and they're already trying to support it. And what I believe is that if the yen falls or the yen is seriously devalued, that could upset the entire global financial structure, given where the yen is situated in that full financial structure or currency structure. And that could lead to, I don't know, gold going to 6, 7, 8,000, the dollar being seriously devalued because the Japanese would have to sell a bunch of treasuries in order to support the yen, which they've already done. Well, what do you think about this?
Well, that's a mouthful. let's let's deconstruct it.
Okay.
First of all, I need to say, after 50 years, my foreign currency trading track record is unblemished by success. So whatever I say about that, discount. On the oil markets, I think I have something to say there. I've been in that business for a very, very long time. And I suggest that half of what you say is accurate, which is to say that there was substantial above ground inventory, particularly in countries that could afford to have one. The Chinese, the Japanese, the United States, and we've run off, as an example, now 70% of the U.S. Strategic oil reserves. The Chinese are less inclined to tell us what they've run off, but obviously a substantial amount. But the second thing that shows us is that markets work. In the United States, when the pump price doubles, we curse, usually the oil companies, as opposed to cursing the governments who we should cuss. But then we fill up the tank and drive on because we can afford to. Higher oil prices are an inconvenience to us. We don't have a supply problem, we have a price problem. But in Sri Lanka, in Malawi, in Myanmar, in Bolivia, what happens during periods of high oil prices is that cars get parked. Markets work. And the cure for high prices is always high prices. What the market has ignored about this shortage is the fact that prices, particularly prices above 100 US dollars per million, per 6 million British thermal units, destroy demand. And in places where they can't afford these prices, demand is being destroyed in real terms. The third part of what you said is, I think, also true, which is to say, if the difficulties in the Gulf persist, if no de facto armistice is reached, we will not be pricing oil in anticipation of shortage. We'll be pricing oil around the reality of shortage. And
Hmm.
if you begin to ration oil by price rather than the anticipation of that, you price it very much higher. There are already reports of cargoes ready to deliver that are outside the Gulf that are trading at substantial premiums to spot. And if this problem continues, by problem, I mean the closure of the straits and the hostilities between the U.S., Israel, and Iran. I'm afraid we could expect much higher oil prices, not as high as many people think, because people who are in different circumstances than the three of us on this call will simply not be able to afford oil. And that will absolutely moderate demand. The impact that you talk about on the Japanese is very real. Japan doesn't have access either to the storage capacity of China
Right.
or to any domestic supplies. And the consequence there is that Japan Inc. is seriously constrained. And Japan Inc. is guilty of what in Canadian terms would be called an own goal, in the sense that post Fukushima, they shut down their nuclear fleet, which was an important part of energy security in Japan. The consequence of that is that they have to generate way, way, way too much baseload electricity, I'm sorry, by burning liquefied natural gas, which they have to import, which is a real challenge for them. As to the impact on the Japanese yen and its potential to destabilize the global financial situation and its ultimate impact on the gold price, I'm going to leave that to the two of you. I wouldn't want to burden your listeners with my mistakes around FX.
Okay, that's completely fair. So, I mean, to complete that thought, and then I'll pass it over to Phil, is that with just what I'm thinking is that the dollar infrastructure that has been overlaid on the planet since the victory in World War II and stuffing every central bank with a bunch of dollars and therefore the dollar becoming the reserve currency is intimately dependent on the Japanese own, close to $1 trillion of debt, and the dollar is based mostly on debt, taking into account the Fed's balance sheet, which is mostly debt, and the Fed is the issuer of the dollar. So I'm taking this as in a logical, positive Austrian economics perspective. So I personally don't see the dollar surviving if the yen keeps falling, because then they'll have to sell treasuries, and then the interest rates will go up, and then the debt will become unsustainable, and then it becomes valueless, and then the dollar, being based mostly on debt, will die with it. And I think that's where we might disagree going forward, or where our thought paths may diverge. I'm not sure, but Phil, do you want to take it from here?
Yeah, I wanted to ask a quick question. So, when silver was going absolutely vertical, you started selling your silver, and I thought to myself, oh, he might regret that. But Lo, you were absolutely correct, Mr. Rule, and I was the chump holding the bag of half devalued silver. So, I want to know what inspired you to sell that, and is there a pattern you would see where you would say, "Oh, this is dollar devaluation. I'm going to hold on to the metals. I don't want more dollars at this point."
Three responses to that. I save in gold, not in silver.
That's
I
fair. Yeah,
consider
yeah. Okay.
I consider gold to be insurance. Well, I consider it to be wealth, and I'm a systematic saver in gold. I'm a systematic saver, and I maintain liquidity in a variety of currencies, not just the US dollar. We can talk about that later, but I save in gold. I speculated in silver. When I bought my silver, silver was sub 20, and I bought it because there was a lot of hate around it. And in my life, you learn to love hate. The fact that everybody was expressing so much hate for silver suggested to me that they had already expressed their preference in the market, which is to say they sold it before they dumped on it in internet discussion groups.
Hmm.
And I knew from past experience that a precious metals bull market is always led by the fear buyer, which is to say the gold buyer. And when the generalist investor comes down into our little ghetto, the precious metals market, the leadership switches from gold to silver. So I thought that would happen. I've also learned that in my speculative account, which is where silver was, when the reason to own something goes away, the position has to go away. You can always find excuses to hold a position. And you find excuses to hold positions that are running, which is precisely the positions that should be sold. The third lesson is that anytime I see a hyperbolic chart, up or down, I take the backside of the trade. These hyperbolic trades, the Canadians call them hockey stick graphs, is a discussion themselves worth talking about. The backside of a hockey stick is just as steep as the front side, but it's a lot less fun if you happen to be long. And so when I saw the hyperbolic up move in silver, I needed to ask myself if my thesis, my speculative thesis, was still intact. The fact that silver had moved from $55, $20 to $75 suggested that it was no longer hated. If my reason to own it was that it was hated, I needed to convince myself of a new reason. And the fact that it could go higher after it doubled or tripled was not sufficient reason. Could is a really lousy word in investing and speculating.
So
So I sold it.
Okay. I want to push back on one point. If the dollar itself becomes hated, so the dollars are just littering the streets and nobody's bothering to pick them up, that's not a time to jump in on dollars.
I share your perspective on the dollar.
Yeah.
I would listen. I've proven to myself that I'm not a good currency speculator. Uh, what I do, I maintain liquidity in a variety of currencies. I try to pick currencies that I live my life in. So, as an example, I invest a lot in Chile. So I have some Chilean pesos, but I live in the US. And if you're looking at fiat currencies, I like the Doug Casey quote that the US dollar is the worst fiat currency in the world with the sole exception of all the others. Or the suggestion that the dollar is, again, quoting Doug Casey, the prettiest mare at the slaughterhouse. I suspect that I will be living my life in dollars for a substantial period of time. So I have to accommodate myself to the deterioration of the purchasing power of the US dollar. I know perfectly well that if I buy a US 10-year treasury yielding 5, that I'm not making 5, I'm losing 3.
So
I
if you
believe
saw, oh sorry, if you
I
saw
believe
gold going parabolic, would you sell your gold, your savings gold, or would you hold on to that regardless?
it would depend on what the alternative uses of the cash were. I was able in 2009, I mean, not a lot of gold by Fort Knox standards, but a lot of gold by
Maybe
my,
you did have a lot of gold by Fort Knox standards. Nobody knows,
We
but
don't know. Yeah.
okay.
I was able to audit my gold. That's true. And
Right.
I was fairly sure of its provenance.
Mhm.
Uh, but there were asset classes that I viewed as cheaper than gold. Gold is a unique form of wealth in that it's wonderfully liquid. And so, as an example, there was a pipeline company called Kinder Morgan. Um, Huge competitive advantages, and it was selling at a yield of 13. And I thought if the Fed um, added enough liquidity to the system to save the system, which was a concern in 2009, that 13 yield would probably fall to 5 through price appreciation of the equity. I thought that would be the clearing price uh, for that yield. And the yield was admirably sustained by a wonderful operation. A pipeline, you put goop in one end and you take goop out of the other end and you charge people for getting goop from point A to point B. It's a very simple business. So I was able to sell my gold because there was an asset class that I could buy that I believed in the intermediate term had a vastly superior return. Liquidity is mostly useful to an investor for periods of time when liquidity is in short supply. I had a lot of liquidity in 2008. And the consequence of that in 2009 is I needed to decide whether I wanted to hold my gold to be able to sleep nights or I wanted to be able to deploy it to increase my wealth. And I chose door two. So it wouldn't necessarily be a hyperbolic trade that would cause me to sell my gold. Although if I had a trading position, I probably would liquidate it. It would be what alternative uses I had for my capital.
What I think you're saying is that, yeah, there is a theoretical situation where gold just keeps going up and up and up and up and up and just doesn't stop. And that's not really gold going up and up and up. It's just the dollar dying, right? And I think we both acknowledge this as a theoretical possibility. I think it's just more imminent than you do. And what you're saying is that it's not nearly imminent enough for me to actually take this seriously. And in the meantime, I'm just going to keep trading gold and silver as assets, liquidity assets, and the dollar is going to survive. And it's up to me to determine, where the next break is going to be, or around there, or whatever, right? So where I differ is, and I think where Phil differs too, is that we're in a situation where where debt keeps exponentially rising faster and faster and faster. There's some breaks for a few months, but it just keeps going higher and higher, and there's no escaping that. And in my theory, there's only going to be one more major banking crisis, like something like 2008 or 2020. The next one, like in 2008, they printed, what was it? 16 trillion, and in 2020 they printed, whoever, it was more than that. You can do the research or whatever number you want to say. It was more than 2008, whatever it was. The next one, whenever it hits, is going to be twice as much as what it was in 2020. And I don't see the dollar surviving past that. And I don't know how long it's going to take. I don't know. It could be a few months. It could be a few weeks. It could be I really don't know. But I'm just not comfortable selling my gold. Silver, okay, maybe, because it's more of a speculation than gold. Because once the Fed prints one more time, I don't see the dollar surviving, and then we get out of the dollar and return to money. I don't see any other currency taking its place. Um, I'm pretty sure you see this as a theoretical possibility, but why do you hold that it's so far off, or at least conceivably far off in the decades or however long you think it is?
Uh, the dollar's a confidence game, and people love to be swindled. Uh, Most people, and I mean really most people, I have this conversation all the time, Rafi, with people. Um, People do not want to confront the responsibility that they have for their future. They want to offload the responsibility for that on society. And society makes it really, really, really easy to do that.
Yeah.
I give a talk to lots of groups, investment groups, but also youth groups, called The Arithmetic of America. And I talk about the United States economy from the perspective of a credit analyst, which is actually what I am. And if you do it in arithmetic terms, if you talk about the wealth creating capabilities of the US economy relative to our public and private debt, the circumstance is extraordinarily bleak, as it has been for a very long time. But it works until it doesn't. Again, if you compare the US dollar with other currencies, you suddenly become less nervous. Quoting Doug Casey again, very quotable. The dollar really is an IOU nothing. The chief competitor, the euro, is a quote, who owes you nothing. And the BRICS currencies, made up of a bunch of unconvertible and opaque economies, is obviously nobody owes you anything. So if you compare those three stores of value, an I owe you nothing is better than a who owes you nothing, which is better than a nobody owes you anything. The medium of exchange, well, let's look at it differently. Let's look at it arithmetically. In the United States, the largest savings and investment economy in the world, 23% of world savings and investment assets. The market share of precious metals and precious metals related assets in the US economy is 1/2 of 1%, which is to say that 1/2 of 1% of total savings and investment assets in the United States is denominated in a dollar, or pardon me, in gold, which means that currently gold is as relevant to Americans as a pimple is to an elephant's behind. Uh,
I agree. I agree with you. That's true.
and I think for that reason, the institutional bias and the popular psychological bias in favor of the US dollar suggests that the con goes on. I don't have enough faith in that I don't save in gold. I guess the third comment I have, and this is going to sound really arrogant, perhaps it is that I've been a pathological saver in my lifetime. Really, truly a pathological saver. Hitchhiking to university as opposed to spending a quarter on a bus. I've also worked very hard. I've been very lucky. And I don't spend much. So I have, relative to my needs, preposterous savings.
And I got a limousine sitting out there a mile long with 25 women just dying for me to go, woo!
The consequence of that, particularly given that I don't spend much money, is it's feasible for me to hold gold and US dollars. I hold, and I need to say, we talked earlier about the negative real yield on US dollars. I realize completely that the liquidity that I hold in this floating abstraction called the dollar is costing me at least 300 basis points in real yield, which is to say the yield that I get is dwarfed by the deterioration of the purchasing power of that specie. But I learned in 2008 that having liquidity when nobody else does is a powerful tool. So I personally consider that 3% negative yield to be an option premium on having liquidity for a period in time in the market where other people don't and panic. Gold is probably a better form of liquidity, except in the immediate aftermath of a market decline. If you'll remember 2008, gold held its bid for 24 hours. And then the margin clerks, who don't care what you think about the asset, they merely want to clear the liability, will sell whatever has a bid, including gold. You will also learn that gold comes back much more quickly than other asset classes. But in the immediate aftermath of a liquidity crisis, what works, at least right now, is dollars. And so I have to hold dollars as an investor.
Right. Okay. So look, I think we see this almost exactly in the same terms. I described it a little differently, but I've said many, many times to my subscribers and to my Substack subscribers that we're in a tension between the two forms of liquidity, the natural form of liquidity, which is gold, which is ultimately what the dollar was based on at the beginning, and what I hold and what Phil holds, it is still based on now. Because the only value of the dollar, the only purchasing power of the dollar ultimately comes from its gold value, which is maintained by that exchange rate. But what you said really strikes me because you are trying to balance your own emotions. You have a certain amount of savings, which gives you a certain amount of comfort, and other people have different amounts of savings, which gives them different amounts of comfort. And what the wisest thing to do as an investor is to balance your emotions so you're not freaking out in any given scenario or so incredibly satisfied with yourself that you think you're a genius and you're invincible. Like that, those are both very dangerous emotional states to be in. So I think how I interpreted what you're saying is that given your financial situation and your saving situation, you're just trying to best balance your own emotions according to what you have, which makes complete sense. And now I want to open this up to a more philosophical discussion and ask you this, that in your opinion, what is money? And I'll give you two options. And if you don't like either option, pick a third. I'm not pinning you down or anything, but is it a thing, like a physical thing, money itself? I'm not talking about credit. I'm talking about money. Is it a thing, or is it a point system where an authority assigns a certain amount of points to you, and then you have purchasing power based on those points? Or is it a real thing?
To me, money is information.
Okay.
Really, truly, it's information. Money is certainly a medium of exchange. I believe money should be a store of value. If you assume it's a medium of exchange, what money is for you and me is the method of expressing our volition. Money comes, let me rephrase that, savings, expressed in money or not, comes from generating more value for others than one consumes for oneself. It's information because it's a way of expressing or acquiring for yourself those things, whatever they might be, time, cars, food, land, that is more important to you than the labor or the goods that you gave up to acquire it. I've thought a lot about money. I'm in the banking business, as you know, and one wonders about one's basic product. uh,
So
and
does the phrase gold is money? You disagree with that statement from JP Morgan?
I do not.
You do
I
not.
do
Okay.
not. Gold is a wonderful form of money. I'm not convinced it's the only form of money because anything that can be used to facilitate the exchange between a willing buyer and a willing seller is probably money. I love gold as a medium of exchange for the same reasons that Aristotle did. But what's really wrong with gold as money is that it's difficult to fractionalize. It's difficult to trade. Uh, there's high friction. That changes, I think, within 2 years. I'm relatively certain that there will be a readily acceptable deposit receipt which can be tokenized and turned into a coin. I believe that 2 years from now, you will be able to go into Starbucks and with your phone use part of your gold hoard, which will be expressed in tokenized deposit receipts to buy a cup of coffee, which I think will solve for currently uh, the illiquidity in gold. You know, a normal living, breathing human being goes to buy some gold, and he or she is paying 2.5% in front of spot, and if they go to sell it, they're receiving 2 or 3 behind spot, and that 5% scrape uh, makes it difficult to use as money. It makes it difficult to use as a medium of exchange. Tokenization, in terms of gold's use as money, gold's use as a medium of exchange, gold's use as an expression of your volition, is solved by tokenization. At that point in time, I'm probably going to have in my own mind 2 stacks of gold. I'm going to have one that isn't represented as a deposit receipt inside the system, which is to say, my savings. And I'm going to be able to use gold to replace many other forms of liquidity that I have, including most of my US dollar hold. US dollar as a medium of exchange, because I absolutely positively believe that I will be able to exchange fractionalized, standardized depository receipts of gold in place of US dollars to buy Kinder Morgan, like I did in 2009. And I'll be able to operate largely outside of the dollar at that point in time.
Well, you heard it here, folks. Rick Rule is calling the end game in 2 years. I say that tongue in cheek, but I know that's not what you really mean. But me interpreting your words through my own mind, that's what you said. You could disagree with that, fine. I'm just playing around. But um, let me tell you my theory of money, and I want to hear your response. Okay, so I don't think there's any economic difference from an economics perspective between direct barter and monetary transaction. All money really is the most liquid physical commodity in a given economic system. In a prison, it could be tins of mackerel. In a global economy, it's gold. And now credit, which is a point system, is based on money in that the dollar begins as gold, the dollar as the reserve currency, because the US took over the entire planet after World War II and able to put its currency in different central banks with all that infrastructure already there. But let's, skip all that history. Once you have a credit system that was originally based on gold, then you can have a point system based on credit. But if the faith in that credit goes away, you're left with nothing but money itself. And so when the dollar eventually does collapse, and we can disagree on the timeline, the most liquid commodity turns out again to be gold. And right now I agree with you. The dollar is more liquid than gold because the friction is less. But when faith in the dollar, because the debt keeps climbing, goes away, then the most liquid thing is not going to be euros, not going to be yuan, not going to be anything else. It's just going to be gold. And then people are going to have to figure out honest credit systems through which to apportion that money, which is the most liquid commodity in an economic system. So you have money, and then on top of that, you have credit. And what my thesis is that the credit is going to die. And then all of the stuff on the planet is only going to be exchangeable for what is actually the most liquid physical commodity that exists on the planet. And there's not one. There's gold, there's silver, there's others. If nobody has any gold or silver, they use the next most liquid thing. There's no one single money. There's more liquid and less liquid things. What do you think about that?
I tend to agree with it. What I've always liked about gold is that it doesn't represent a promise to pay. It represents a payment.
Yes.
It
is a payment. It is a payment.
Your dollar in any form of credit, and for that matter, Bitcoin, isn't a promise to, isn't payment. It's a promise to pay. It's a call on production. One needs to decide what the real utility of gold is. In other words, if you consider it to be payment, what is gold's value actually based on, other than history? The suggestion that...
Wait, can I just interrupt you for a second? I would say it's not based on anything. It's just a commodity that changes its value the least relative to all other commodities that is exchanged for it, due to whatever natural characteristics that it has, and we can like list them, that it can be melted down, it could be a portion, blah 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 blah. But we all agree on that. It just happens to be that.
I would only say that some members of our community would argue that any store of value in the world other than gold is faith-based. And I would argue that gold is also faith-based. Yeah. We're talking about the fact that it's held its value for 2,000 years, and we're talking less about why. I agree with you that it requires less faith, in particular, than promises to pay. But ultimately, holders of gold like myself need to recognize that even its value is arbitrary and capricious. Certainly, I feel better about it, which is why I express my own preference for saving in gold. But I think members of our community need to consider the fact that some of the value of gold as payment is similarly faith-based.
All right, Phil, what do you got to say?
I wanted to ask you a question. So you started in about 50 years ago, was it? You started in the commodities business?
Yeah, I guess. Yeah, 1970.
So that was the doldrum. I mean, you probably spent 20 years scraping, 20, 30 of those years scraping, while Apple and IBM and all these other tech companies were just going absolutely vertical. You were sitting there in like the commodities, scraping sow bellies and orange juice futures, and trying to make a living in what was hated, because the inflationary system. One thing it does is it discourages investing in real goods and service, or real commodities, real things. It just focuses everybody into the high flying world of tech or high finance. And so I'm curious, what kept you there? I mean, you're known as the commodity king. You could have been known as the bond king or the tech stock king. What kept you in commodities, especially during the doldrums?
I was born and grew up in Silicon Valley. I was born in San Jose, California, which is downtown.
That explains it.
I saw the people.
Okay.
I'm very good friends with a guy named Paul Stevens from Robertson Stevens, who was one of the most important tech underwriters in history. And I was struck by a conversation I had with Paul. We were talking about software investing. And he said the median market leading time frame for a high quality software innovation was 19 months. That suggested to me that by the time I understood a technology, many of which I couldn't spell or pronounce, they would be obsolete. And I decided that a cycle where something went from out of favor to in favor, but it took 8 years, gave me a better chance to understand and compete than something with a product cycle of 19 months where I was competing with many people who were smarter than I. The whole period of time that you describe, while commodities were out of favor, was superb to me because I discovered in my 20s the fact that markets work. And I discovered, I mean, my first incarnation in commodities was in the decade of the 70s. And I made a boatload of money. I mean,
We're not just doing this for money. We're doing it for a
boatload of money as a very young guy. And unfortunately for me, I conflated a bull market with brains. In other words, I thought I made that money because I was some young genius. Then when the commodities market imploded in 1982, I ended up with a negative net worth. And I figured out what kind of genius I actually was. But I learned an important lesson, which is that markets work. And in good markets or bad, if there is a commodity, a physical commodity, whose accessibility is necessary for the material well-being of humankind, and if that commodity is priced at a discount to the cost to produce it, including cost of capital, one of two things happens. Either it becomes unavailable to society and the material well-being of humankind declines, or the material rises to its cost of production, including the cost of capital. And it is always the latter. So for 45 years in the commodity business, I could almost always find something where the price had to go up. And it was actually easier for me to do that, determine which commodities, were selling at a discount to their total production cost, than it was to figure out what kind of unpronounceable gizmo was going to change the future of humankind. There was a point in time in my career when I was much younger, when I thought that the success that I had enjoyed as a natural resource investor meant that I was a good investor and I could invest in any sector. I learned, unfortunately, that's not true. I learned that by specializing first in natural resources and then later in natural resources and conventional financial services, that I could outcompete other people because I was a deeper and more experienced thinker in areas that I was familiar with. I had cut my teeth in banking around natural resources, then asset management, then wealth and management, and then insurance. And the consequence of being an experienced practitioner in natural resources and building financial services business to serve the natural resource business meant that I came to learn a lot about banking, a lot about insurance, a lot about wealth management and asset management. But I've learned now in my 70s that if I go outside of sectors that I'm deeply competitive in, I don't do well. The consequence of that is, as Buffett says, I've determined my range of capabilities and I draw a very tight circle around them, and I never go out.
Well,
I don't have any fear of missing out. So the fact that, as an example, I didn't catch the NVIDIA wave, I'm highly unlikely to buy a company I can't pronounce. I just don't think that's
I
good
don't think
practice.
it's pronounceable. You can't pronounce an N and a V. It's not even a name. It's like it doesn't
No,
have a
no,
name.
I was drawn to things that I could spell, pronounce, and understand, like gold, coal, copper. No, I prefer single or double digit words as opposed to triple or quadruple digit words. And so I'm drawn to commodities.
Well,
Do you?
how I would say it is that you've been through the emotional ringer, 70s and 80s. You've been through the highs and the lows, and you've been how do you say when the metal heats up to red, the metal is ready for the maker's hand.
Until at last, at the end of human strength, beaten into the dust from which he came, The metal is ready for the maker's hand.
Forged. You were forged.
Yeah, forged. I was looking today just on Yahoo Finance and I see Dell, right? And I've had Dell computers before, and in the 90s and early 2000s they were crap and I hated them. And everyone hated Dell, and now Dell is like gone vertical, and Nvidia's gone vertical, and this AI stuff has gone vertical. You said that you're not really affected by this, and I say that I'm not. I'm not really affected. I don't have any temptation to go into AI now and this and that, but it does it hurts me in a way like these like this is happening and like this is going to end and I have on one hand Schadenfreude for those who are going to fail because of it, and I don't know, that's not good to have it, but I have it. It's like it's a natural human thing, but then I don't want them to suffer. But when you see these things going vertical, and no FOMO, but do you see the stuff that we're into, resource stocks, gold, silver, commodities, doing the same thing that these bubbles are doing now, at least in terms of purchasing power, if not in terms, not saying like dollar amount, but in terms of purchasing power? Do you see us being in a similar situation to the AI people and the AI geniuses now, assuming they sell out now and they're floating on whatever? I mean, what's going to happen?
Yes, yes. I was around in the decade of the 70s, the last manic natural resource market we have. I was an immigrant to Canada. Um, I won't go into all that, but I left the United States and went to get an education in Canada. And I, among other things, cut my teeth on the Vancouver Stock Exchange, which is a very, very, very rough place. A place, I mean, a place that created wealth, but also a place that was very good at monetizing stories, which is a different way of saying lying. And I remember when the Vancouver Stock Exchange stocks really began to outperform, that Americans would drive up to Vancouver, double park on Howe Street, run into the exchange on the floor of the exchange past the security guards, and try to ask the floor brokers to buy them something. They didn't care what. Um, Buying pieces of paper with dreams printed on them from liars is not a really, really, really rational activity. And so I've seen what a manic market in resources looks like. And I've been in financial services, including retail financial services, long enough to know that when a sector gets over hot, the last part of the cycle, the blow off part of the cycle, where the narrative matters much more than the utility, is something that will occur. I've seen in the 45 years that you all describe as the doldrum, I've seen 4 white hot mini markets, including the January market that we just had in silver. It's odd that every reason to own silver that propelled people to buy it for $100 in October existed 5 years ago when I bought it at 20. But most people who don't study, most people who prefer to feel as opposed to think, don't adopt a narrative until the narrative has been proven by price. But when the narrative has been proven by price, the narrative is less valuable, which is to say every advantage that silver had at 100, it had at 20. The difference is at 20, taking the risk made some sense. Speculating in the narrative made some sense. At 100, the narrative was more attractive because it had been proven, but all the juice was out of the squeeze. The nature of most human beings is that because price information is easy to gather and value information is hard to ascertain, people pay slavish attention to price without paying very much attention to value. I believe that money is made on the delta between price and value. Not that you ever get it right. You just have to get it more right than the moron next to you. And that's been, responsible for whatever success I've enjoyed, that sort of discipline. and the understanding, even if I can't ascertain exactly what the value is, that value matters more than price.
So my final question here, and then I'll pass it off to Rafi to close out if he wants to. How did you your ability to buy what is hated? That is emotionally difficult. Like I also bought silver when it was 20. I whaled into silver when it was about $20. I wrote it up to 120, and I'm still riding it now at 60. That was if it was to collapse to $14, let's say, just absolutely crap the bed. I would have my logic would say I need to tell my wife we need to go and cash out our savings and go buy a whole bunch of silver, just back up the truck and get as much as we can. But she would be screaming at me. She said, "What are you talking about, Phil? You bought it at 20, you didn't sell it at 120, and now you want to buy more at 14?" So my that the normal that and that would be a very reasonable normal human reaction that I would have to try to override and say, "No, babe, you don't understand, it's going way higher in the future." How did you teach yourself to react in this way, and how do you convince other people in case it goes to 14 and talk to my wife?
Two good questions. I learned to do it in the beginning by not doing it. In the decade of the 70s, believed the Club of Rome narrative that the world was going to run out of commodities, that markets didn't work. The big thinkers in the decade of the 70s told you that by the year 2000, 100 million people a year were going to die of starvation, that oil was going to be $200 a barrel, all that kind of stuff, that markets didn't work. And as a young man, I believed that. It was an important part of my narrative. It was where I was making my money. I identify as a blue-eyed sheik. 1982 changed a lot of things for me. I learned that markets did work. And if they worked on the downside, they had to work on the upside. That's when I decided that in my life, because what I did was natural resources, which are capital intensive and cyclical, that my I had three choices. No, two really. I could be a contrarian, which is what I became, or I could become a victim, which is what I was. And being a contrarian was a much more attractive alternative to me than being a victim. I had also, in the decade of the 70s, immersed myself fairly deeply in the oil and gas business. So I came to understand how value was created, which is to say, I developed a very deep working knowledge of the oil business. I've since developed a deep working knowledge of the mining business and a reasonable working knowledge of how value is created in timberland and agriculture, which means I have a head start over most competitors in understanding what value really is. I could walk your wife, if she had the willingness to listen, point by point by point, through how much it costs various aspects of the silver industry to create silver, how much it costs to recycle silver, how much it costs to produce silver as a byproduct of copper production, how much primary silver production costs. And while I wouldn't get exactly right the inflection point between price and value, I could make a case to her that the silver price had to go up. Whether she would be willing to listen after the trauma of watching your portfolio fall that much is a different question. But ultimately, that's none of my concern. The second part of the question is how to convince others. And you will see that I've completely failed retirement. And the way that you find a fairly small number of people who you can add value to is by talking to tens of thousands of people. And so through social media,
that's how I found Phil, actually. Yeah.
so through social media, I cast an extremely broad net. At Sprott, when I was still at Sprott, we built the physical gold, physical silver, physical platinum, palladium, physical uranium trusts. And we found 250,000 people who were interested in what we were doing, but we had to be heard by 100 million people to find 250,000. The same thing building Everbank. When we built Everbank, one of the country's first online banks, and we introduced the concept of foreign currency savings deposits, telling people we were no good at forecasting which currencies were going to do well, so we wanted to own several. We built a 275,000 person retail constituency in that business, but we're on record as having had 20 million discussions with people. So the second part of the question is that you have to talk to a very, very, very large number of people, and you don't convince them at the time. What you do is you establish yourself in a little corner of their brain until something that they read in the Wall Street Journal or the New York Times causes them to draw you back out of that little corner. You
Mhm.
introduce an idea to them which is at first foreign, but is interesting enough that they store it. And then something happens in their life that is an impetus to cause them to be less hostile to your point of view. I've studied the second part of your question for 50 years. Part of doing what I do, I mean, I'm a very lucky guy. The first part of my value creation is I look for things that make sense to me. And then having done all the work, at least in my active career, in addition to doing it for myself, I sell it to others. It's wonderful to be able to monetize work that one does for yourself by making it available to other people.
Yes, I completely agree with you there. And I just so two comments and then my final question. Um, you said something about the dollar, sorry, the juice being sucked out of silver. And now while I agree that that's kind of what happened with the move from 120 down to 58 or wherever the bottom was. Ultimately, it wasn't really the juice because silver is money and gold is money. I don't think it was actually the juice being squeezed out of silver as much as the magnet of the dollars, like, getting the juice back into it and away from silver. But when the dollar dies, all the juice is going to go back into silver anyway because that's the most liquid commodity next to the dollar. So I agree with your analogy, but there's still going to be an end game, and silver is going to be undefined in terms of the dollar. And I think somewhere around 15 to 1 for a little bit relative to gold, and that's what I'm betting on. Maybe I'm wrong, but if I'm wrong, I'll have gold anyway, so it'll be fine. And just reflecting on what you said about reaching out to hundreds of millions of people to get 250,000. I don't want to go deeply into it, but I hope you understand what I'm saying. That during the years of 2020 to 2022, I was expelled from society for certain reasons. Um, uh, and what I was doing was just yelling out to people, whoever could hear me, about my positions. And I wasn't trying to convince anyone. I was just putting up red flags. And eventually we got enough people together, from my perspective, globally, to connect with each other and to stop what was going on in those years. And that really helped me with my gold and silver investments. Or not my investments. I say it's my divestment from the dollar, but it's the same kind of principle. If you know the truth, and even if you're wrong on the details, but you know where you are, you just go out and you say something and you say what you think is right, and then you gather people, and hopefully you're right about. And if you're intellectually honest with yourself, which is not easy to do, but you get it. So the last question I have is RickRuled. Is that your real name, or is it like a wrestler name and you used to be like a WWF guy, and are you related to Ric Flair? Because you kind of look like him.
My real name is Arthur Richards Rule the Fourth.
Wow.
And when I was an extremely young man, if somebody would have said Arthur, half the room would have stood up because we were all big. And so my mother nicknamed me Rick. Rick Rule is not a bad name. It's easy to remember, sort of the joys of alliteration. So I am, well, I guess on my passport, I'm still Arthur Richards Rule the Fourth. But
So it
much
kind of
like
is a
in,
wrestler name. If you were a
yeah,
gold and
much
silver
like,
wrestler, that would be your name.
it's a useless handle for me. Rick Rule is, it's much easier.
Absolutely.
All right. I actually suspected it was sort of a nickname. I was right. I'm glad to get that confirmed now. You heard it right here. Tell your friends.
Thank you very much, Mr. Rule. This was a great conversation. I really appreciate it.
Rick, please. Mr. Rule
Oh,
is my
Rick. All
father.
right.
All right, Rick.
That's a
Thanks so much for coming on. I will
Pleasure.
and good luck in your endeavors, because I'm sure if you do well, we'll do well and we'll all do well. And then we'll go out and we'll save our friends who didn't listen to us as much as we can.
In terms of saving your friends, if I might, any of your listeners who care about my idea about natural resource investing can go to my website, Rural Investment Media, list their natural resource stocks, and I will rank them for free, which is a very good price. Comes with a full money back guarantee, of course. RuleInvestmentMedia.com. List your natural resource stocks. I'll rank them. Please no tech stocks. Please no pot stocks. Please no crypto. Natural resource stocks only. Rule Investment Media. I'll rank them for free.
All right, the link will be in a pinned comment at the bottom. Thanks so much, Rick, not Mr. Roll, Rick, for coming on, and hopefully have you on again soon. And the gold to silver ratio will be something around 15-1, and we'll see if Zoom still works.
I look forward to it. Thank you.
Take care.
Bye.
The most well-known, the best-looking, the best-dressed, custom-made clothes, gold around my neck, Rolex watch around my wrist.